And then just in the last 30 or 60 days, we've seen a big run up in the crypto prices. So now I'm sitting here thinking, okay, maybe this crypto winter is starting to thaw. We don't know exactly what's going to happen in the future, but the ETF applications that have been filed, about a dozen of them by the biggest financial institutions in the world, is a huge endorsement. It's going to bring in new pools of capital. Next year, I think the move to layer 2 solutions is going to improve the scalability of crypto enormously. I think that's going to be a huge thing, kind of like moving from dial-up to broadband on the internet. I think there's a Bitcoin halving next year. The emerging regulatory clarity, 83% of the G20 countries are working on crypto legislation now. So I think all these factors are going to lead to hopefully a good outcome next year for crypto.
Less than 2 weeks after suggesting Bitcoin's potential in extending Western civilization, Coinbase CEO Brian Armstrong highlights 4 key factors that he believes will drive a significant and positive cryptocurrency bull run in 2024 and 2025. Armstrong emphasizes the potential approval of a spot Bitcoin ETF by the U.S. Securities and Exchange Commission, envisioning it as a catalyst that could prompt institutional investors to inject substantial funds into digital assets, potentially increasing industry capital from $30 billion to over $300 billion within the next 12 to 18 months. Additionally, he sees promise in the implementation of Layer 2 scaling solutions to overcome the scalability challenges of Layer 1 blockchains, paving the way for faster, more efficient transactions. Regulatory clarity, particularly in the United States, is identified as a crucial element for sustained industry growth. Clear guidelines from regulatory bodies such as the SEC and lawmakers are considered essential. Armstrong also notes the significance of the 2024 Bitcoin halving event as a positive factor for the industry. With these hurdles addressed, Armstrong expresses confidence in the industry's potential for continued growth and emphasizes the ongoing efforts of industry leaders to counter negative narratives. The second half of the video explores a recent interview between Armstrong and Tobi Lütke, a Coinbase board member and CEO of Shopify, shedding light on the latest developments involving Coinbase, SEC Chair Gary Gensler, and the U.S. judicial system.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
When I first read the Bitcoin white paper, this was in December of 2010, and if any of you haven't read it, take a read through. It's pretty complicated, it's pretty dense. I had to read it many times to try to fully tease it apart and understand it. But it is a brilliant computer science breakthrough at the fundamental level, and it was kind of handed down to us in this perfectly formed thesis, and we still don't know who did it. And that by itself is kind of a bizarre thing. But I guess if you fast forward, or go back even a few more years. So I had studied computer science and economics. I didn't know how those two things might interact in the future, but I was interested in both in college. I had spent a year living in Buenos Aires, Argentina, so I happened to get a sense of what happens to a country when it goes through hyperinflation. I was an early employee at Airbnb, and I was a software engineer helping them kind of get payments going into and out of 190 countries around the world. I saw how difficult that was. And there was a couple experiences like that, which at the time, I would not have been able to connect any kind of thread through all of these things. But all those things primed me for that December 2010 moment when I first read that Bitcoin white paper. I think I saw it on Hacker News one day. And I remember thinking to myself, this feels really important. I didn't quite know how it would all play out, but I felt like this might be the most important thing I've read in a long time. And so, I started, and I should say also, I was always very excited about this idea of economic freedom. How could we make property rights and free trade and sound money sort of, some places in the world had that, others didn't, and it was a huge detriment to those places and the citizens of these countries that did not have good economic freedom, good financial infrastructure. And so I remember seeing that Bitcoin white paper and thinking, okay, this could be as powerful as the internet. It's this global decentralized system, nobody controls it. That's what gives it kind of this permissionless access, it can't be manipulated. And if we use this kind of new decentralized protocol, we could actually inject good, healthy financial infrastructure into all these countries around the world to increase economic freedom. And so that was the original idea. I remember thinking that I was crazy, actually, because I couldn't stop thinking about it. I started to go to some early meetups in San Francisco, but I talked to a bunch of my friends about Bitcoin at that time, 2011, my smartest friends, and they were like, I don't get it. It's this, why would anybody use like this made up money? It seems like you're involved in some scam, or what is this? Bitcoin's not going to work out. And so I had a lot of self-doubt about it at that time. I was like, this feels really cool to me. Something about it's very interesting, but most people I talked to weren't excited. And so I had to take a little bit of a leap into the unknown. And long story short, getting that first $150K check from Y Combinator is what gave me the confidence to quit my job and go have a real go at it. So crypto has gone through probably 4 or 5 of these cycles now, where people get irrationally exuberant and then it crashes down and they're too pessimistic. And so I always like to tell people, it's never as good as it seems, and it's never as bad as it seems. You have to kind of look at the fundamentals of how many transactions are happening per day? What's the total amount of value locked up in these things on chain? And those are sometimes more true metrics than just looking at the price. One piece of advice I give to entrepreneurs in the crypto space is, if you haven't tried your idea through at least one cycle in crypto, bottom to bottom or top to top or whatever you want to do, then you haven't really tried it. Because what a lot of people do is they start their idea in a down market, or they start it in the up market and then it goes down and they think, everything's over and it's despair, it's harder to raise money. But typically these cycles are something on the order of 3 years. And so if you can't power through at least one cycle, you haven't really tested your idea.
Many individuals who cite the extreme volatility of the cryptocurrency industry as a deterrent to buying crypto assets tend to focus on the downside volatility rather than the equally volatile and inspiring upside moves. While some may be deterred by the 70% or 80% drawdowns, it's crucial to consider the substantial upside potential. Notably, top crypto assets, despite experiencing significant drawdowns, have consistently managed to recover, an accomplishment unique to the cryptocurrency industry. Moreover, choosing not to invest in alternative asset classes like crypto leaves investors perpetually tied to traditional assets built on the unstable fiat system. In a December 4th post, Coinbase CEO Brian Armstrong highlighted that currencies like the US dollar will continue to depreciate, eventually becoming fractions of their present value, which is already significantly diminished from decades ago. Armstrong emphasizes the importance of acknowledging the potential for growth and innovation within the cryptocurrency space. As the discussion continues, the Coinbase CEO shares his expectations for the 2024 and 2025 bull run.
Well, it certainly was very frustrating. You saw a bit of this at the board meetings over the last few years, where we felt like, hey, we're taking a compliant approach, that's the right way to do it, but these offshore unregulated exchanges keep popping up. They're launching all kinds of products without KYC controls, and the products they're offering are illegal as far as we can tell. US citizens are going and signing up for these things. They might have had a US entity which they claimed was where US customers were going, but it was kind of an open secret within the industry that US citizens could relatively easily bypass KYC and wind up on on their main platform. So their US entity was kind of like a fig leaf for US regulators. And we kept thinking, this is not going to last. I mean, regulators don't always move super quickly, but they do eventually act, and it's going to be a very bad day. And I mean, that all came to fruition, so we were right. But I can tell you at the time, it was painful. I mean, we basically watched our market share just erode. Tens of billions of dollars of money just moved offshore to these platforms as they were moving quickly and breaking a bunch of laws at the same time. So in some ways, I think it's terrible for the industry that there's been now several companies that have blown up, and CEOs probably are going to be sentenced here in February. On the other hand, I feel like a real sense of pride that Coinbase stuck to its guns and didn't take any shortcuts, had a long-term view. And I also feel like it's a moment for us to close this chapter, turn the page, if you will, on the Wild West craziness of these offshore unregulated exchanges, so that the many companies that are trying to build in this space legitimately can kind of have a level playing field to compete, and just that's how it should be. So the current state of crypto is, 2022, a lot of things, all growth stocks came, including Coinbase, came down sharply as interest rates went up, and then FTX blowing up had a further deepening of the crypto winter. We had to adjust our cost structure and all kinds of things to exist in that environment. Q2 and Q3, we got back to financial health, EBITDA positive, generated some cash, right-sized the business. And then just in the last 30 or 60 days, we've seen a big run-up in the crypto prices. So now I'm sitting here thinking, okay, maybe this crypto winter is starting to thaw. We don't know exactly what's going to happen in the future, But the ETF applications that have been filed, about a dozen of them by the biggest financial institutions in the world, is a huge endorsement. It's going to bring in new pools of capital. The enforcement actions, I think, have actually psychologically allowed people to turn the page and say, okay, justice has been served, the pain has been delivered to the market, and still we can grow from here. And then, next year, I think the move to layer 2 solutions is going to improve the scalability of crypto enormously. I think that's going to be a huge thing, kind of like moving from dial-up to broadband on the internet. I think there's a Bitcoin halvening next year. So my guess is that next year will be pretty positive. The emerging regulatory clarity, 83% of the G20 countries are working on crypto legislation now. So I think all these factors are going to lead to hopefully a good outcome next year for crypto. And we're just, our goal is just to kind of keep our heads down, keep building, try not to get distracted by the noise and the headlines. It's all very sensationalist. And just if we can just build good products for our customers and not do something stupid in the meantime, then I think we're going to be in a very good place.
As mentioned earlier in the video, let's swiftly shift our focus to the recent clashes between Coinbase and the SEC on December 15th. Coinbase Global's chief legal officer, Paul Grewal, announced in a post that the SEC had rejected the firm's request for crypto rules. Filed on July 21, 2022, the petition suggested that the SEC engage in substantial discretionary rulemaking to establish a new regulatory framework for crypto asset securities. Grewal revealed that the SEC, after initially refusing to respond, denied the petition only after Coinbase sought legal intervention. Brian Armstrong, Coinbase CEO, responded to the SEC's action, stating that the court compelled the response, allowing them to challenge it further and inch closer to regulatory clarity. Notably, SEC Chair Gary Gensler justified the denial by citing supposed existing laws and regulations applicable to the crypto securities market. Gensler emphasized the SEC's role in addressing the crypto security market through rulemaking, asserting the importance of maintaining discretion and setting priorities. This development indicates a prolonged struggle for reasonable regulations in the United States, particularly with figures like Gensler and Warren in influential positions. Share your thoughts on Armstrong's interview and the SEC's response to Coinbase's petition for regulatory clarity in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.